Over the last week, there's been a lot of talk, a lot of columns in response to a segment that 60 Minutes had last Sunday night. Now, it was all about the potential property bubble that's been talked about for quite a while now. And I thought it's well worth mentioning, given that a lot of the people that come in here that are setting up self-managed superannuation funds or wanting to take that next step, the first logical thought is about investing into property. And I always give them my pretty blunt opinion on that sector in terms of the amount of debt that people have got to take on, the amount of risk they've got to put into one particular asset. But it's just interesting to look at what has happened in some of the people in this segment where there was one young couple in 2012 were crowned the Property Investors of the Year in a property magazine. Now, this young couple had debt of $6.3 million and 10 properties. Unfortunately, now a lot of those properties are vacant and not providing any income, and of course you just can't support that amount of debt on normal wages. So within 3 or 4 years, you go from the Property Investors of the Year owning 10 properties to unfortunately broke. But this is happening probably not to that extreme, and that is a mining town where they've really been hit hard. But I see shades of that here as well. And in recent times, some of the farming land sales have been extremely. The transactions are going through have been very high. It was $2,000 3-4 years ago, now $3,000. But if the earnings of an asset can't keep up with the value of the asset, say that $2,000 farming land, you get $100 lease per acre. That's 5%. It's very hard to go to the farmer and say, well, look, if you want to lease it next year, I need $150 per acre because it's now valued at $3,000. They just can't pay. But will they go and borrow money to buy it? Yes, they potentially will. So this all comes down to supply and demand. At the moment, money is cheap and easy to get. I think that's having a huge impact. There's got changes in negative gearing, so this is going to affect the residential market. Whether the impact of buyers from China will stop or slow is yet to be seen. But there are pockets in obviously rural and mining sectors, in mining towns, that will be fully impacted, but these things will flow through to the economy over time. So are we in a bubble? I think we are somewhat in some sort of bubble, and I would ask people to be cautious about the debt they take on, because Australia now has the highest household debt in the world. Our property prices are right up there with the top, including Hong Kong and Singapore. So it really pays to be careful before you invest into property, because you do take on a lot of debt to do it quite often, and all that money is invested into one asset, and you've got to hope that that one asset performs well for the next 10 or 20 years. So word of caution, please seek advice before you jump into any type of investment. And yeah, thank you for listening, and we'll speak to you soon.